In this video we'll break down whether buying the high-flying semiconductor stock, Advanced Micro Devices AMD right before its massive Tuesday earnings report is a smart move or a costly mistake. You're going to see what Wall Street is quietly positioning for, where the real growth is coming from, and the one risk most investors are ignoring right now. We're talking about a business sitting at the center of the most powerful technological shift in decades, powering everything from artificial intelligence to data centers to next-generation computing. This is the kind of company that can compound for years if the execution is right, but also one where timing matters more than most investors realize. For the record, I've been talking about the AMD opportunity on this channel around April last year when I was buying shares around $103. The stock is currently around $347 as the time I created this video, and it still has room to run. I'm currently up in profit around 230% on the stock. Now let's dive in deep into the company. Before we even touch the numbers, you need to understand why this business matters right now. AMD is not just another chip company, it is a core infrastructure provider for the future of computing. Every major trend you hear about today, artificial intelligence, cloud computing, high-performance gaming, enterprise data centers, all of it runs on silicon. And AMD is one of the very few companies on the planet capable of designing that silicon at scale. That positioning alone gives AMD a structural advantage. This is not a cyclical story anymore, this is a secular growth story. Now here is where things get interesting. AMD stock has already surged more than 52% year to date. That is not a small move, that is a massive run in a very short period of time. The stock has been driven by one thing above everything else: expectations. Expectations for AI, expectations for data center growth, expectations for market share gains. And right now, those expectations are extremely high. So the real question is not whether AMD is a great company. The real question is whether the current price already reflects that greatness, especially with earnings just days away. Let's start with what Wall Street is expecting. Analysts are projecting earnings of about $1.29 per share, with revenue coming in around $9.89 billion. That would represent roughly 32% year-over-year growth. That is strong by any standard. But here is the key detail most investors overlook. The market is not reacting to whether AMD grows. The market is reacting to whether AMD beats those expectations and, more importantly, what it says about the future. Because right now, the future is where all the value is coming from. And AMD has been building a very compelling future narrative. One of the biggest drivers behind that narrative is its data center business. This is the engine of growth. This is where the real money is being made. AMD's data center division has already been delivering record numbers, including over $5.3 billion in revenue in a single quarter, with growth approaching 40% year over year. That kind of growth is not happening by accident. It is being driven by two major forces. First, AMD continues to take market share in server CPUs. Second, it is aggressively expanding into AI accelerators. Let's break that down. On the CPU side, AMD's EPYC processors have been steadily gaining traction in enterprise and cloud environments. Companies are shifting workloads to more efficient and powerful chips, and AMD has been winning those contracts. That is a long-term tailwind that does not disappear overnight. Now on the AI side, things get even more explosive. AMD is positioning itself as a serious player in AI hardware. Its upcoming MI350 accelerator chip is expected to boost data center performance significantly in the first half of 2026. And later in the year, the launch of the MI450 and the Helios platform could drive an even bigger acceleration. This is where the story shifts from strong to potentially transformative. Because AMD is not just building chips, it is securing massive demand. There are already major multi-year commitments from leading AI players. Two of the biggest partnerships involve hardware procurement agreements totaling 6 gigawatts each. To put that into perspective, each gigawatt represents roughly $15 billion in potential revenue. Let that sink in. Even partial execution on those agreements could translate into tens of billions of dollars flowing into AMD over the next few years. In fact, projections suggest that AMD could generate around $17 billion in GPU-related revenue in 2026 alone. That is not incremental growth, that is step-change growth. And it does not stop there. There are also large-scale infrastructure projects being built around AMD's architecture. One example includes a massive AI supercluster with tens of thousands of GPUs powered by AMD's next-generation platform. This reinforces the idea that AMD is becoming deeply embedded in the future of AI infrastructure. This is why some analysts are extremely bullish. One major upgrade recently pushed AMD's price target all the way up to $375. That is a significant jump and reflects confidence in both near-term performance and long-term positioning. But here is where the story gets complicated. Not everyone agrees. While some analysts are raising targets, others are pulling back. There are concerns that expectations for future growth, especially beyond 2026, may be too aggressive. There are also concerns around rising research and development costs, which could pressure margins even as revenue grows. In simple terms, AMD might grow fast, but not all of that growth may translate into higher profitability. And then there is valuation. This is the part you cannot ignore. AMD is currently trading at a trailing price-to-earnings ratio of over 120 times earnings. Even on a forward basis, it is around 50 times earnings. That is expensive. At those levels, the market is pricing in near-perfect execution. Any disappointment, whether it is slightly lower guidance, slower AI adoption, or margin pressure, could trigger a sharp pullback. This is exactly why timing matters so much heading into earnings. Now, let's talk about momentum. Despite the concerns, the stock has continued to push higher. At one point, it even hit all-time highs before pulling back slightly. There was a recent drop of about 3% after one analyst removed AMD from a positive catalyst list, citing a lack of near-term drivers to push the stock even higher after such a strong run. That reaction tells you something important. The market is becoming more sensitive. When a stock is running this hard, it does not take bad news to move it down. It just takes less good news. And this brings us to the earnings setup. Right now there is a high probability, around 76% according to market participants, that AMD will beat expectations. That sounds bullish on the surface, but think about it carefully. If most investors already expect a beat, then a simple beat may not be enough. The company might need to significantly exceed expectations or provide very strong forward guidance to justify further upside. Otherwise, you could see a classic sell the news reaction. Now let's step back and look at the long-term picture because that is where AMD really shines. This is a company with a 5-year forward earnings growth rate projected above 42%. That is elite-level growth. It reflects strong demand, expanding markets, and continued innovation. AMD is also expanding globally. It recently signed a multi-year agreement with the French government to support national AI initiatives. This includes providing compute resources for researchers, developers, and startups. This is not just revenue. This is strategic positioning within government-backed AI ecosystems. That kind of integration strengthens AMD's moat. It makes the company harder to replace. On the product side, AMD continues to push boundaries. Its latest processor release features advanced 3D cache technology across all cores, delivering massive performance gains. These innovations help AMD stay competitive in high-performance computing, which is critical for both enterprise and consumer markets. So from a long-term perspective, the story is intact. Strong growth, expanding market share, deep integration into AI infrastructure, global partnerships, continuous innovation, all the ingredients are there. But in the short term, everything comes down to expectations versus reality. And right now, expectations are very high. So should you buy AMD before earnings? The honest answer is this: it depends on your strategy. If you are a long-term investor who believes in the AI revolution and AMD's role in it, then short-term volatility may not matter. You are investing in a multi-year trend, not a single earnings report. But if you are thinking about buying right now purely for an earnings pop, you need to understand the risk. The upside may already be partially priced in, while the downside could be sharp if expectations are not exceeded. This is not a low-risk entry point. This is a high-expectation, high-volatility setup. And that is exactly why this moment matters. Because what AMD says on Tuesday will not just impact the next few days. It will shape the narrative for the rest of the year. Will AI demand accelerate faster than expected? Will margins hold up despite heavy investment? Will data center growth continue at this pace? Or will the story start to cool down? Those are the questions the market is about to answer. And depending on those answers, AMD could either continue its breakout or face a meaningful reset. Now let's go deeper into the part of the story that most investors either underestimate or completely ignore, and that is risk. Because when a stock runs more than 50% in a matter of months, the conversation shifts. It is no longer just about growth. It becomes about sustainability. And AMD is now at that exact inflection point. The biggest risk heading into earnings is not whether the company performs well. It is whether it performs well enough to justify the current valuation and the future expectations already baked into the stock. Remember, AMD is trading at around 50 times forward earnings. That multiple assumes a very specific path forward. It assumes continued dominance in data centers. It assumes AI demand keeps accelerating. It assumes margins improve over time despite heavy spending. If even one of those assumptions weakens, the multiple can compress very quickly. And when multiples compress, stocks fall even if the business is still growing. Now let's talk about what could trigger that. The first risk is margin pressure. AMD is investing heavily in research and development to stay competitive in AI and high-performance computing. That spending is necessary. Without it, the company risks falling behind. But it also means higher costs in the short term. Some analysts have already pointed out that even with strong revenue growth, margins may not expand as much as expected because of these investments. If AMD reports strong sales but weaker than expected margins, the market could react negatively. The second risk is expectation overload. Wall Street is already projecting strong numbers. Investors are already expecting a beat. The probability of beating expectations is high. But again, a beat alone is not enough. The market wants acceleration. If AMD delivers results that are simply in line with expectations or slightly above, but guidance does not show a clear acceleration into the second half of the year, that could disappoint investors, and that disappointment could lead to selling pressure. The third risk is segment imbalance. While the data center business is booming, the personal computer segment is expected to remain weak throughout 2026. That creates a mixed narrative. On one side, you have explosive growth driven by AI and enterprise demand. On the other side, you have softness in consumer-driven markets. If the weakness in PCs becomes more pronounced or starts to offset some of the gains in data centers, it could create concerns about the overall growth trajectory. Now here is another layer most people miss. Timing of revenue recognition. A lot of the excitement around AMD right now is tied to large-scale AI partnerships and future hardware deliveries, but not all of that revenue will show up immediately. Some of these contracts will ramp over time, some will extend into 2027 and beyond. So even though the long-term opportunity is massive, the near-term financials may not fully reflect that potential yet. And if investors are expecting immediate impact from those deals, there could be a disconnect. That disconnect is where volatility comes from. Now let's shift to what you should actually watch during the earnings call, because this is where smart investors separate themselves from the crowd. The first thing to listen for is data center guidance, not just what AMD reports for the past quarter, but what management says about future demand. Are orders increasing? Are customers expanding deployments? Is there confidence in sustained growth through the rest of the year? That forward-looking commentary matters more than the backward-looking numbers. The second thing is AI chip traction. Pay close attention to any updates around the MI350 and upcoming MI450 platforms. Are customers adopting these chips faster than expected? Are there new partnerships or expansions of existing ones? This will give you insight into how competitive AMD really is in the AI space. The third signal is pricing power. If AMD mentions the ability to raise prices or maintain strong pricing despite competition, that is a sign of strength. It means demand is high enough to support better margins, but if there are hints of pricing pressure, that could signal increased competition or slowing demand. The fourth is capital allocation. How is AMD spending its money? Are they increasing investments in key growth areas? Are they generating enough free cash flow to support those investments without weakening the balance sheet? Last year, AMD generated over $5 billion in free cash flow, which was a significant jump. Investors will want to see that trend continue. Now let's talk about sentiment. Right now, sentiment around AMD is split. On one side, you have highly bullish analysts projecting massive upside, driven by AI demand and market share gains. On the other side, you have more cautious voices warning that expectations may have gotten ahead of reality. This divergence is important because when sentiment is split, earnings become a catalyst for resolution. Either the bulls are right and AMD continues to exceed expectations, pushing the stock higher, or the cautious view gains traction and the stock pulls back to more reasonable levels. There is very little middle ground in situations like this, and that is exactly why this earnings report matters so much. Now let's bring this all together. AMD is a high-quality company operating in one of the most important industries in the world. It has strong growth drivers, expanding market share, and a clear role in the future of AI and computing. There is no question about that. But the stock is no longer cheap. It is priced for success. And when a stock is priced for success, the margin for error becomes very small. So the real decision you need to make is not whether AMD is a good company, it is whether now is the right time to buy. If you believe AMD will significantly outperform expectations and continue to deliver strong guidance, then buying before earnings could pay off. But if you think there is any chance that expectations are too high, or that the company may deliver strong but not exceptional results, then waiting for a pullback might be the more disciplined approach. Because in investing, patience is often more profitable than timing, and sometimes the best opportunities come after the hype settles. Now here is the bottom line. AMD is positioned to be a major player in the AI-driven future of computing. The long-term story is compelling and supported by real growth, real demand, and real innovation. But in the short term, the stock is entering one of the most critical moments it has faced this year. Earnings will either reinforce the bullish narrative or challenge it, and whichever direction it goes, the move could be significant. So if you are thinking about buying AMD before Tuesday, make sure you are doing it for the right reasons. Not because of hype, not because of fear of missing out, but because you understand the risks, the expectations, and the long-term opportunity. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now here is a question for you. Do you think AMD's long-term advantage in AI infrastructure is strong enough to justify buying at these levels? Or do you believe the current valuation already prices in too much future growth? Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.